Alishia.
So we had the Financial Times this week just highlight, international fund managers disinvesting from South Africa in a very big way, specifically in mining stocks. And adding to that kind of commentary, that the uncertainty has led to some investors making a strategic decision to unwind their exposure indefinitely. Now, that's certainly scary stuff, and what the RMB report seems to reiterate is that South Africa is losing that first place or traction in terms of keeping and maintaining that first place position.
I think that's a very important point to make, especially in terms of the indices, is that South Africa is still at the forefront, specifically now that we've included North Africa. It's encouraging to see that it does surpass the North African giants, the likes of Egypt, Libya, etc. But having said that, what we tried to emphasize within the report specifically was that the gap between your first and second position, in this case South Africa and Egypt, is narrowing. The three indicators that we specifically use in the indices: market size, market growth, and your operating environment. Whereas your market size is quite consistent, your market growth is a very volatile number, and we understand that's with South Africa. Forecasted growth is around 3.5% over the next 5 years. Very subdued when compared to 6-7% growth rates in countries elsewhere across Africa. Also, when looking at your operating environment, ever so slight decline, but a decline nonetheless. And that is also across the composite index of 4 surveys that were included within that operating environment indices.
Nema, it's Lindsay Williams in Cape Town.
Hi,
the ones that really interest me, I mean, apart from the powerhouses, we've spoken about South Africa, Nigeria and Egypt, and they're fairly obvious, but it's countries like Rwanda and Ghana and Zambia that are so interesting, especially Rwanda. It's such a tiny country, but I noticed that last week at the World Economic Forum, Premier Wenjiabao actually singled out Rwanda and encouraged investment in that country. So there's lots of these little countries that are suddenly coming to the fore that may even become the sort of medium-sized to larger size economies of the future. It is exciting, isn't it?
Quite certainly. I mean, especially Rwanda, and that is an exciting prospect throughout the document. We don't look at it in terms of its geographical size because it pales in comparison to other East African counterparts, the likes of your Kenyas, Tanzanias, etc. But where we have seen it increase substantially, specifically within its operating environment. It's a landlocked country, very little resource, but it has quite a positive environment for investments, specifically physical infrastructural investment within the country. So actually setting up your business. And I think it's that fact and the continuous reforms that we've seen since 1995. And that's as far as back as we go in terms of the timeline. We've seen consistent reforms on the part of Rwanda and also the likes of Zambia, you mentioned, Ghana, etc. And as a result of which we see them improving in terms of the overall attractiveness.
Of course, overall it's an exciting story, and you see the appeal. It's warranted, the kind of ranking that Rwanda is getting on an index like this. But you've also got to ask the question, to what extent do you factor in a low base effect?
Absolutely. You have to keep that in context when looking at African growth rates, specifically market size, even the level of operating environment. And that's why we try to take it further back, instead of just looking at a relative comparison between 2 or 3 years, keeping in mind that most of these countries are coming off of a low base. We looked at timeline and progression since 1995. And you have to be quite discerning, specifically, as I said, around growth, because most of these countries post-conflict, specifically in the 2000s, are expanding at quite a rapid pace. But I think by taking a composite index, equally weighting the 3 components, we then try and find your overall ranking, and we become more discerning about your top 10, your top 20 environments. And it's quite consistent, which is encouraging for us. We haven't seen very vast movers and shakers over the last 2 years. But having said that, we've also included North Africa, which has pushed down some of your sub-Saharan African countries in terms of the rankings.
Speaking of sub-Saharan African countries, I think the 3rd biggest economy in sub-Saharan Africa is Angola. And you think of Angola and you think of the boom led by oil and other resources. But even though it's a big economy, it's not easy to do business there. It's a fascinating story, because I know a lot of Portuguese people who are suffering economically in their own country are going back to Angola to find jobs. And on the other hand, a lot of Angolan money going into Portugal and snapping up banks, other businesses, properties, that sort of thing. But it doesn't matter whether the economy is big. If you can't do business there, of course it hampers investment.
Exactly, and that's why we encourage businesses and firms to take an overall view on an economy and not simply just look at your market size, your population, your demographics, your market growth rate specifically. It's around your operating environment, and Angola is a very unique case. You get two sets of businesses that have been well established within Angola, who operate using Portuguese as a main business language and find it easy to do business there. And then you have those who find it very difficult for cross-border transactions from South Africa, Namibia, etc. And as you rightly said, you have disparate income within the country itself. So you might not necessarily, when looking at other macroeconomic variables, see the same type of benefit that would perhaps be suggested by your market growth or your market size. But then what we do say up front within the document is that this research is not prescriptive, and it is based on your own experience, and it is very specific to the industry in which you operate. For example, as you rightly mentioned, resources, oil and gas exploration, specifically oil in Angola. If you have been within the extractive or the production industry within Angola for quite a number of years, you're quite well set. But in order to diversify away from resources is quite difficult within the current business environment. So it is a grey area. It is discerning whether you think it is an inspiring or an uninspiring economy to invest in.
Just some of what you've highlighted here, drawing attention to the creation and the benefit of trading blocks that have been created.
Yes.
If you're looking at the East African community, we had the Common Market Protocol being signed. To what extent has that those countries that have formed part of that bloc benefited from that?
Well, most people might tell you that when you're looking at regional integration, we've seen the experience of developed economies. We've seen the EU. We now see that we're almost at a point where it is crumbling. And you ask yourself whether or not that could then play out in Africa. Are we actually on course to provide sustainable regional integration? And I think if you look at the pace of expansion within the EAC, specifically your three bigger countries, Kenya, Tanzania, and Uganda, it has been slow, but the reforms thus far have been sustainable. Particularly when you're looking at platforms, financial market reforms, trade reforms, particularly around your customs unions and your trade areas. It has encouraged expansion and growth within those environments. And I think that if we extend that strategy into other areas, into your West African blocs, we've seen the success across your SADC region, that it can be sustainable, but over time. Importantly, and I think it's not just specific to Africa, is political will. We've seen that across the developed world within the Eurozone as well. So we need for those building blocks to be in place before we can actually see the success of these regional blocks.
Well, Nema, let's leave it there. Thanks so much for your time
Thanks,
today.
Alishia.
Nema Ramkhelawan-Bhana from RMB.